Hey guys, welcome everyone. Thank you once again for joining me on the Binomo World channel. Welcome to the live stream where we're going to talk about how to master your emotions. Now, emotional situations often get us into profits or losses, and it's something that I want to touch on, talking about it today, because as you know, it's um, it's not easy to master your emotions when you are not only making losses but also when situations where you are making lots of money. When you're making lots of profits, maybe you have gone through this experience yourself. You're making a lot of profits and things are going higher and higher. The profits are growing, but it's when you are most successful that your emotions will be the factor that's going to cause you to make the next trade losses. Okay, it's one of those things. It's a circle of life where when you are winning, that's when you are most vulnerable to losing, and when you are losing, that's when you actually can start to win. When you are all the way down, when you've reached the bottom, actually the only thing that can happen to you is things to go up. Okay, it also works the other way. When you are making all the wins and having all the victories and having all the trophies, that's when you tend to make mistakes, because naturally you will tend to feel relaxed and you feel confident, or actually overconfident, and that's how things will get to you, and it will cause you pain rather than more success. So the thing about mastering emotions is we can look at this from the perspective of really great traders or really great um, winners in all fields. If you look at people who are champions at sports, tennis, uh, golf, or football, or anything, you'll see that all these people who are every year champion, this year champion, next year champion, for the next 5 or 10 years, they share one thing in common, and it's that one thing that's going to guide us in terms of mastering our emotions as traders. And that one thing that is shared by all winners or all champions that are consistent in their performance is they have awareness. They are aware of their confidence level. They are aware of where they come from. They are aware of their roots. They are aware of their weaknesses even when they are very successful. You know, sports persons like Tiger Woods in golf, or Rafael in tennis, or whoever, Usain Bolt in running. When you talk to them, they don't talk about how good they are. When you talk about how they are winning, and if you talk about their successes, their reply to you is not how good they are, how strong their muscles are, how good their technique is. No, you see them talking about how they control their mindset, and mindset is really leading in terms of how you are managing what you are thinking when you are winning, when you are fighting, when you are losing, and how to come back from losing, or if you're winning, how to stay winning, at the winning level. So they will talk about mindset things, they will talk about psychological things. So these are the things that actually apply to us as traders. So what can we do as traders to control our emotions? The very basic thing that we probably want to think about is what causes our emotion to go up or down. In trading, it's actually quite simple. When we open an up trade and things continue to go up, we will feel confident. We will feel confident. And when things are going down, when we are opening an up trade, we will feel disappointed. We will feel useless. We will even feel that nothing is working. When sometimes, for certain strategies, the trade must go down for it to continue to go up. Sometimes our analysis is not sufficient. Sometimes our analysis is not yet accurate. So we think when we open an up trade, it is supposed to go up and up and up and never come back down. When If you study your trade history, if you look at your trading journal, or trading history in the platform, you will find that often your winning trades will sometimes pull back. And especially if you're talking about trading stocks, forex, or gold, there will be pullbacks, there will be retracements. On its way up, assets, financial assets, especially forex, will tend to come back down before it continues to go even higher. So it's really, we need to understand our assets to be able to understand our emotions. Sometimes our feelings, it's definitely not logical, it's definitely not rational. Okay? It's not rational because when we open an up trade and the asset comes down, when we are thinking, oh my god, that was the wrong trade, that was the wrong direction, when actually it's a pullback. It's a temporary pullback. It happens all the time. Let me open if you open the platform right now, I'm looking at Euro USD right now. Look at that. This is 30 minutes time frame. I'm on a 30 minutes time frame. See, quite clearly you can see the asset is actually moving down. The price is, on the left side, the price is higher. If you go somewhere to the middle of the screen, the price is lower. And if you go even further to the right, it's even lower. So the asset is clearly moving down. But remember, although it's moving down, it doesn't mean pullback will not happen. It doesn't mean retracements will not happen. It will happen because we are in financial markets. People don't agree with everyone. You don't agree with me, I don't agree with you. You don't agree with other traders don't agree with you. So this disagreement, where you think it's supposed to go down and other people think it's supposed to go up, causes these pullbacks that we are seeing on the market. So Euro USD would come down and then pull back, and then come down and then pull back, and then come down again and then pull back up again. So being aware of the nature of the assets that you are trading is one step in mastering your emotions. You are not following your emotions blindly. If previously, if you did not understand your assets properly and you saw pullbacks happening and you are thinking, that was the wrong trade, I opened the wrong trade, so I should quickly close that trade, or I should quickly find the next trade. Now when you've understood your asset, you should look at it in a way that if you open your trade and then the asset moves the opposite direction of your trade, you should be thinking now with more maturity and thinking, this is expected and this is a pullback. So if you have that sort of framework or understanding that is guiding your mind, your analysis, and your trading decisions, the feeling of being wrong when the assets pull back will be countered, will be compensated by your understanding of what's really going on. So what's really going on is something that you can tell yourself, that you can train yourself by looking at the assets every day, every week, every month. Once you know the behavior of assets, you can tell yourself when the emotions come up, when the asset is moving in the wrong direction, your mind can tell yourself to calm down. This is expected and this is just a pullback. Now, pullbacks, the one thing about pullbacks is you need to have a definition for it. You need to have a definition for it. I'm seeing your question, one the nature. I'll get to it after this. The one thing about pullback is you need to have a definition of pullbacks. It doesn't mean that the moment the assets pull in the opposite direction, it's a pullback no matter what. It's a pullback only up to a certain level. So in the case of Euro USD that we have on screen here, you could define pullback different from how other traders define pullback. Okay, it's depending on your strategy, it's depending on my strategy, it's depending on everybody's strategy. So how do you define pullback? So to me, if it's a pullback, it should not retrace 100%. So I'm opening a down trade from the left side of the screen, I'm opening that down trade and it goes down. Now to me, it should not pull back to cross my entry price. Okay, so different people have different definition for pullbacks. They have different strategies. So some people, they can take pullbacks that cross the entry price by 5 pips, by 10 pips. Okay, for me, I don't define pullback as something if it crosses the entry price, if it pulls back all the way up, that means the trend to me has changed. Okay, some people might still call it pullback. To me, it means the trend has changed, and therefore, if I'm opening a trade, I can no longer rely on the decision to make a down trade on Euro USD. Okay, so if you got to understand what your definition of a pullback is, so that you don't make decisions wrong decisions. So if the trend changes and you continue to believe that the asset is just pulling back and you continue to open more down trades, that is a mistake. You have to define what pullback is. So first, to regulate or to control our emotions, we have to understand that prices will pull back. The second step is we must define what is the definition of pullback. Is it pullback 50% of the Fibonacci? Is it pullback 100% of the Fibonacci? Or is it maybe just pulling back 38% of the Fibonacci? And we have the Fibonacci tool on the platform that you can use. Let me find that. Fibonacci. Okay. So let's apply this and see the levels. Okay. So this is the Fibonacci level applied for the movement from the left side to the first lower low. Okay. So if it pulls back 100%, it will go back to this line at the top. So to me, if it goes back all the way to 100% of the Fibonacci level, it means the trend has changed and this is not a pullback. Okay, so if I'm opening a trade now, I will not open a down trade on Euro USD. I will watch for the confirmation for the trend to move in the other direction, which is going up. And then I will open probably an up trade if I see more confirmation and more signal in my analysis. Now, some of you might not use 100% pullback. The asset actually pulled back to 61.8% in the Fibonacci. So some people might not use that. Some people might use somewhere here, 38%. So if it pulls back to 38%, to them, that's a definition. It's no longer a pullback. Okay, so you got to be specific in terms of what you call a pullback. Now we got a question earlier from Wonder Nature about trading, how to confidently take an entry without fear. Okay, so how do you become confident to make a trade? I'm gonna put the question down on the screen so that everybody can see it. How to trade with confidence and without fear. So let's look at this question right here. How to take a trade with confidence and without fear. From my experience, the way you build confidence is from training. Okay, so the more times you trade one asset, okay, practice with one asset. The more times you trade one particular asset, and the more profits you make from it, you build confidence. Okay, you build confidence, and of course with confidence, and of course with more consistent winning trades with one asset, that will automatically remove your fear. The fear is coming from where? It's something that you need to ask yourself. Where is fear coming from? Is it coming from previous trading losses? Maybe you made 5 trades yesterday and all 5 you lost money. Is fear coming from that, from yesterday's trading? Or is fear coming from today? You're not sure if you open the trade today, you're going to lose money or you're going to make money. If you're not sure about yesterday, let me tell you something. Yesterday's trade got nothing to do with today's trade. Absolutely nothing to do with today's trade. So that fear is emotional. You got to be thinking scientifically, you got to be thinking mathematically, and whatever happened yesterday is different from today. Yesterday has got a different set of news. Today has got a different set of news. Yesterday's traders are not the same as today's traders. People who lost money yesterday probably wouldn't trade today. Or if they come and trade today, some of them trade with even more money because they're trying to make back the losses. So it's not exactly the same. People who trade $100 yesterday, today probably just trade $10 because they are afraid. So in terms of trading, fear coming from yesterday's trading or last week's trading, remember this, it's got nothing to do with today's trading. Today is different than yesterday. Okay, the movement of assets yesterday will not be exactly the same as the movement of the asset today. So if you look at yesterday, if you just use a really simple example, look at Euro USD. I'm going to go to the 1 day time frame. If the asset is moving exactly like it's going to move yesterday, you wouldn't see that green candle. You see, today is a green candle. Yesterday was a red candle. The day before yesterday was a red candle. This is Euro USD. So yesterday's movement for Euro USD got nothing to do with today's movement of Euro USD. So really, if you have fear from yesterday, tell yourself it's a different day. That's it. Get over it. You got to control yourself. Okay, now if you have fear coming from today, you're not sure, you're making a trade, you're not sure whether your analysis is correct. Now, when you are not sure whether your analysis is correct or wrong, that means you haven't have enough practice with the strategy that you are using, or you don't have a strategy. If you don't have a strategy, then I tell you, you got to build a strategy, create one, or find one from someone else and use it in practice in the demo account until you like the strategy, until you like the results that come from that strategy. Okay? Then you will have more confidence in the strategy to apply for it to today. Now, if your fear is coming from you have a strategy, but you're still not sure whether your analysis is correct or wrong, and you don't know whether if you open the trade you're going to make money or lose money, that's natural. Everybody goes through that. Now, to be able to overcome that fear, what really needs to happen is you need to watch the asset on a lower time frame. So let's say I'm looking at Euro USD right now. Okay, I'm looking at Euro USD right now. It's on screen. You can open it and see it for yourself. I'm looking at it. I'm thinking the asset was going up, up, up. It was going up for many days, and now it's starting to pull back. It's starting to pull back. Is it gonna go all the way down or is it gonna go all the way up? So for me, when I look at this, if I just use a quick strategy of looking at pullbacks, I'm thinking the asset is pulling back now, but in the past it has been showing the same pattern. Look at this. It went up and then it pulled back 3 candles, 3 daily candles, and then it went back up over the next 4 or 5 candles, 4 or 5 days. It went back up and continued to higher prices. So really, this pullback I'm seeing right here looks like it's weaker than this. Why do I say it's weaker? Because the body of the candles, look at the body of the candles here, they are longer than this 3 combined. If you put this, it's shorter than this long candle right here. Look at the second red candle here, it's shorter than the red candle right here. Look at this, it's even, look at yesterday, this is yesterday's candle, the red candle. It's even smaller than the day before it, and it's smaller than the pullback here. So just by quickly looking at this, I'm thinking this is a pullback, but Euro USD is still going up. Okay, so but I don't open the trade yet. I'm building confidence. So then I go down to lower time frame, and I'll probably go to 15 minutes or 30 minutes, and I will look at it from there and see if I like the pattern on this lower time frame. So I'm looking at this right now. This is the 15 minutes time frame. It's going sideways. It's just going sideways. So to me, the asset I'm thinking is going to go up. And if it's going to go up, and I'm thinking it's going sideways now, I will wait for it to come out from the sideways pattern. Once it comes out from the sideways pattern, then it will confirm that my analysis that is going to continue to go up, it will confirm that analysis. So I can open a trade after the breakout from the sideways pattern. So how do we decide when it's going to break out from the sideways pattern? Now, when we don't know, that's the market to decide. But what we can do is we can mark on the chart with a horizontal line. Okay, I'm going to use a horizontal line to mark the top. Okay, so the top is there. I've marked the top with that yellow line. And to me, when it breaks that yellow line, the resistance line that I've drawn, it's 109.3067, then I will consider that the asset, Euro USD, has broken out from, the sideways pattern. Okay, so when that happens, when it breaks out from the sideways pattern, I can open my up trade. Okay, if I open it before the confirmation, that's going to be dangerous, and that's going to be, it's going to make me worry. So if it makes me worry, that's where the fear comes from. So really, to avoid fear, you have to understand what your analysis is telling you, and you have to set the decision points that when are you going to make the trade. So if I'm seeing an asset like Euro USD being moving sideways, and then I'm saying I'm going to open a trade when it's moving out of the sideways pattern, and I'm using the yellow line above the sideways pattern as indicator. So if it crosses the yellow line, then it's going to tell me my trade is here. I can open my trade right now. Okay, so that's really one of the ways you can take to open a trade with confidence and without fear. Always watch your assets. Watch it every day, even when you're not making any trades. Open it every day, and then mark the levels where you think the asset is going. If you think the asset is going down, mark the support level where you want to see the asset break. So if it breaks that support level, you should have less fear, because it is confirmation that your analysis is correct. So when your analysis is correct, the only thing left to do is to take action and to open that trade, down trade. Okay, if the asset is going up and you think it's going up, but you are not sure, you're afraid, you have fear, and you want to have more confidence, mark the lines above the asset where you think it should go. Okay, and once those levels, the resistance levels, are broken, that's confirmation for you that your analysis, number one, is correct, and then second, you should open a trade in that direction, the direction of the trend, to be able to make profits from it. Okay, so really, the way you trade with confidence is by knowing what you're doing, knowing the assets, and then knowing the decisions that you are going to make. Okay, so what else? Do we have any other questions? If you have any other questions, just put them down in chat, and I can probably take a look at it in the live. We have a Turkish friend here from Umon Tashdemir. Merhaba. Günaydın. Yeah, this is in English. This live stream is in English. Hakash Tiwari, my voice is too low. Let me see if I can fix that. Thanks for your feedback. Let me see if I can fix that. Yeah. Hopefully you can hear me better now. I've adjusted the volume, and now let's go back to mastering your emotions. Okay, so we need to understand. Yeah, I've talked about that. Yeah. Okay, so how else can you build a confident mindset and master your emotion? One other thing, useful thing you can do is writing down the mistakes you make. You keep a trading diary, all the losses you make, write it down, and then below each losing trade, you can put in a notepad 5 trades, 1 2 3 4 5. Number 1, Euro USD down trade. Number 2, GBP USD up trade. Number 3, USD JPY down trade. Okay, so you list them down. Now, under every trade entry that you make in your trading diary, write down what mistakes you made. You know, it could be that you've done your analysis and you've used your trading strategy properly. You followed your trading plan, but the analysis is still wrong. Okay, so sometimes check whether it's wrong because of a news event. Sometimes news events can make us our analysis wrong just like that, because news is unpredictable. So if it's wrong because of external factor like news, write it down because of news. If it's because you didn't open the trade at a good price, then write down you didn't wait for a better price. If it's opening a trade where you were 50-50, you were not sure, it passed your analysis but you are not confident, so you write that you're not confident when you open the trade. When you gamble, you write down you totally gamble on that trade. So if you write all these things down, over time you will be able to see what's really causing you losses. Is it because of your strategy? Is it because of you gambling? Is it because of you not understanding news? There will be a reason that is consistent. Or if you do it over time, you track it for 2 weeks or a month, write down every losing trade and then write down the reason why you think you made that loss. Sometimes you make a loss that's too big. And too big, it's not because your analysis is wrong, but because your position, your trade size is just too big. Okay? So it's never a good idea to open a trade that is too big. When I say too big, anything above 10% of your portfolio. So if your portfolio is $50, don't take a $5 trade. That's too big, because you can only make 10 losses and then you lose the whole account. Okay? When you have $50, you want to be able to make something like 30, 40, 50 trades. You don't want to make 10 trades only with $50. You want to make more trades than that. Now, if you are able to break your $50 into 30 or 40 trades, okay, then you will be able to fix your mistakes. You'll make mistakes on maybe 5 or 15 trades. Then you can find out what went wrong and then fix it so that you don't lose the whole account. Okay, and writing it down. The example I gave earlier. So if you follow your strategy and your trading diary is telling you all the losing trades you made is because you followed your trading strategy or trading plan 100%. You know what that means? That means your trading strategy doesn't work. So you got to change your trading strategy. Instead of following it, instead of putting in more money into the account and following that same strategy, your trading diary is telling you the trading plan doesn't work. Change it. Or the trading strategy doesn't work. Change it. So how do you change it? Don't change it on the live account. Change it on the demo account. Find consistency in the demo account. Change the strategy. Get some consistency. Then go back to the live account. That's how you change or fix your trading strategy or trading plan. Okay. So let's look at something else. Let's see. Yep. Yeah, so I've already talked about that. When you open a trade and you wanna feel in control of the situation, open small trade sizes. So if you have a $50 account, open $2 trades, open $3 trades. So with $50, if you open $2 trades, you can trade 25 times. And if you open $3 trades, you can trade 16 times. Definitely better than 10. You know, or if you want to be even more risk management, if you want to apply more risk management to it and lower your risk, then open $1 trades. $1 trades will give you the ability to open 50 trades with $1 per trade. And guess what? If you lower your trade size, you won't have emotion causing fear. You won't have emotion making you feel distressed. You know why? Because when you lose a $1 trade, it's just $1. Compared to your $50 account, it's just $1. You will sleep well tonight. You'll be okay with $1 losses. Okay, but you will not be okay if you are making, with a $50 account, you make $10 trades. You will not be okay after two losses because you've lost $20. What's left is $30. Imagine that. Okay, so that's the other thing. Keep the trade size small, because not because you are afraid, because that is how you manage risk. Okay, small trade sizes is a way to manage risk, so that when you keep risk so small, you wouldn't worry and you wouldn't have fear or stress. Okay, and when you win, a couple of times, you build up confidence. Okay, but that's the problem. When you build up confidence, be careful that you might be tempted, thinking that, oh, I've made all these winning trades in the past, or yesterday or this morning, from $1 trades I'm now going to $10 trades. Remember, when you do that, it's not mastering your emotion. That's really gambling. That's really becoming not responsible. You got to be responsible for the balance in your account. You got to be responsible for the trading decisions that you make. Okay, so that's how you improve as a trader, and that's how you control your emotions. So that's it. That's what I have for today. I hope that has been helpful. Share this video with your friends and network who are also interested in trading. I hope to see you again in a future live stream. Be aware, be alert to the promotion that we have. The coupon is down in the comment section. Use that coupon code for this month, for the whole of this month, to get a bonus when you make a deposit. So I'll see you next time. Take care. Happy trading.